A financial weapon hidden in plain sight for 3 centuries has just been triggered. In the wood-paneled rooms of London's insurance market, a decision was made that sent a shockwave across the globe. In the first days of March 2026, the world's most powerful maritime insurers declared the Persian Gulf a no-go zone. They issued notices on March 1st and 2nd, canceling the war risk insurance policies that are the lifeblood of global trade. Those changes take effect on March 5th. Tanker traffic through the Strait of Hormuz, the corridor responsible for nearly 20% of global oil consumption, started to collapse. This is not a story about paperwork. This is a story about the physical world slowing down. Roughly 150 crude and refined fuel carriers sat idle in the Gulf. The possibility emerged that tanker movement through the world's most important energy corridor could shrink dramatically. This is how global commerce can stall without a single missile fired. Yet just as the world started preparing for an energy shock reminiscent of the 1970s, Washington stepped forward. In a striking economic maneuver, the United States government moved to replace London's role, wagering that American financial strength and naval capability could accomplish what private insurers would not: keep energy flowing. For centuries, London has possessed a hidden form of influence. Not in Parliament, not in armed forces, but inside an institution called Lloyd's of London. This is the nerve center of the marine insurance world. Almost every cargo ship, container vessel, and oil carrier receives financial protection through this marketplace. That protection takes the form of what the industry calls war risk insurance. It shields vessels worth hundreds of millions of dollars from war, piracy, or terrorist activity. Without this coverage, a ship becomes financially radioactive. Banks refuse financing. Ports may deny entry. Owners face catastrophic exposure. Control this insurance channel and you effectively control the flow of global trade. During early March 2026, amid rising tensions in the Middle East, this control mechanism suddenly shut down. Major insurance clubs issued cancellation notices. Coverage for vessels entering the Persian Gulf was withdrawn. Some firms suggested coverage might return at dramatically higher premiums. Rates surged 25 to 50% or even more. For ship owners, the decision became impossible: sail without coverage and risk financial ruin. Remain idle and lose revenue. Many operators chose inactivity. Large shipping companies suspended bookings. More than 150 vessels gathered near the strait waiting for clarity. Markets responded instantly. Large shipping companies suspended bookings. More than 150 vessels gathered near the strait waiting for clarity. Markets responded instantly. Energy prices jumped roughly 10 to 13%. Tanker freight benchmarks surged sharply. Analysts warned that sustained disruption might send crude above $100 per barrel. The global economy suddenly faced the possibility of an energy shock echoing the 1970s. To grasp the magnitude of this moment, we need to understand the institution London built. More than 300 years ago, merchants gathered in a coffee house near Tower Street. There they agreed to share risk for ocean voyages. Each merchant would sign beneath the voyage description, accepting a fraction of the financial exposure. From this simple arrangement, Lloyd's of London emerged. Alongside it grew the architecture supporting modern global commerce. The system functions because exposure is shared. Insurance clubs distribute risk among members. They then secure reinsurance from even larger financial entities. Reinsurers concluded that potential conflict exposure in the Gulf exceeded acceptable limits. For the first time in decades, the system hesitated. Even during the 1980s, tanker war coverage remained available. Premiums rose sharply, yet insurers stayed engaged. Modern warfare altered the calculation. Autonomous drones, electronic interference, and advanced missile systems introduce risks insurers struggle to quantify. London's insurance framework finally encountered exposure it could not confidently price. As London's insurance channels slowed, tanker movements stalled. At that moment, the White House intervened. On March 3, 2026, President Donald Trump revealed a plan that repositioned Washington as the guarantor of energy trade. The United States government would extend political risk coverage for vessels navigating the Gulf. The task would fall to the United States International Development Finance Corporation. Historically, this agency financed development projects across emerging economies. Now it was preparing to function as an insurance backstop for global maritime energy routes. Financial guarantees would be reinforced with military presence. If necessary, the United States Navy would escort oil carriers through the Strait of Hormuz. The strategy echoed a historic mission known as Operation Earnest Will. It became the largest naval convoy mission since World War II. The objective was simple: ensure energy supplies reached global markets. Today's situation carries important differences. Current policy extends security protection to vessels of many nations. The threat environment has evolved as well. Advanced drones, electronic interference systems, and precision missiles create a complex security landscape. Washington's message is unmistakable. For centuries, global maritime trade relied on London's insurance markets. Now Washington signals readiness to assume that stabilizing role. The United States effectively offered its sovereign financial capacity as the ultimate guarantor of energy trade. The response across the shipping industry remains mixed. Some operators welcome the stability. Others remain cautious, aware that financial coverage cannot eliminate physical danger. Naval escorts also require organization and deployment time. Nevertheless, the geopolitical implications are unmistakable. When private markets withdraw, sovereign power fills the vacuum. For 3 centuries, the underwriters of London quietly shaped global commerce. In March 2026, that quiet authority faltered. Facing exposure they could not comfortably model, private insurers stepped aside. Into that opening moved the United States government. Warships and financial guarantees combined to stabilize the energy corridor. This decision represents more than crisis management. It represents a shift in the architecture of global power. For now, the flow of energy depends not on private underwriting in London, but on sovereign assurance from Washington. The rules governing global commerce may have entered a new era. Events unfolding here will shape the global economy for years. Follow this channel for deeper analysis of geopolitics, finance, and the forces reshaping global markets. History rhymes. Power rebrands. Stay inquisitive.